Hey, I want to start off tonight with a little bit of a context commentary. You know, the regulars in this room spend an hour or two a night working through stuff, spend time trading, managing our money and whatnot. And it's a lot of work. And so I'm reading Pension and Investments, one of their special reports, noticing that the mega managers in 2021, headline, despite the 2020 market turndown induced by the pandemic, the 500 largest global money managers grew their assets under management by 14.5% to $120 trillion. $120 trillion in the top 500 guys. And all those guys are managing money professionally. And 2020 was a market downturn. So I guess they lost money. And I'm thinking about one of the people in this tortoise community managing a philanthropic trust who was using blended monthly rebalancing with his special tweaks of it for that are necessary for his size and location. So he's modified blended monthly rebalancing somewhat, nothing crazy. And in his philanthropic trust, he returned 50% last year, while these mega managers are looking at a 2020 market downturn induced by the pandemic with their $120 trillion assets under management. The professionals, let's remember, these are the professionals we're talking about, who manage the money that's too hard for us to do, right? And then I'm looking at this piece about DC mutual funds and target date funds, about how ongoing innovations in those areas with congressional legislation and SEC oversight, those target date funds will ensure that these popular products continue to thrive in all of the retirement plans in Washington, D.C. That's the plans that all the congressional staffers and their buddies are working on. Those are vanilla 60-40 portfolios, equities and bonds modified somewhat by your age, passive investing at the max. And those are getting crushed. And then I read a little further about this little news, blurb. So there's this guy and his firm. They've been active managers of value for 37 years, right? And they are going to cease their trading this year on November 30th and close on December 31st after a steep decline in assets under management from investment losses and client redemptions. And they wrote that note to their investors on October 14th. And the fund manager said, hey, you know, a year ago, I didn't see this global pandemic coming. So the whole year of 2020, he didn't see COVID coming and the impact. And then there was a confluence of events that led us to a conclusion that was inescapable, inexorable. There's just no way out. That over the last 3 to 4 years, they've been losing clients and money because their performance was problematic. And then that created an avalanche. And then we decided we had to do what was right for clients and employees. Now, his partner says, hey, Mr. A and our firm have added a lot of value to many institutional portfolios over 37 years, but current conditions of the last 5 years create a lot of business insecurity. And so even if the clients wanted to hang in with us until value as a style came back into favor, we had to ask ourselves how long we could make that happen until value comes back into play. And, employees were under insecurity too. And so Mr. A tells his clients, hey, we decided to close in response to market forces, and we still believe there's a future for value investment, but sadly, the future is unlikely to arrive fast enough for us. And he said the firm's revenues are largely driven by U.S. mandates with a value tilt, and noted in the memo that our relative performance has suffered because our investment edge is at odds with many forces driving the market. In other words, if you declare yourself as a value investor so that people with fiduciary responsibility can invest in your portfolio, then you have to abide by certain restrictions and regulations about the kinds of investments that you can have based on fiduciary responsibility, and that they don't see value coming back. And this is a guy that was managing at peak $31 billion. Now, at a 2% fee for assets under management, that's $600 million in management fees to manage $31 billion. $600 million just to manage that money. And he's been underperforming losing money for 5 years, including last year. And the terminations. Now, I want you to notice the people whose portfolios he's getting paid $600 million to lose money for. Oh, and that's $600 million a year. He's been able to lose money for the Fresno County Employees Retirement Association. Let's see who else he's got here. $19.4 billion for the LA City Employees Retirement System. $3 billion for the Oklahoma Firefighters and Pension Retirement System. So the managers of the money have been on the phone with clients a lot. Yeah. And the partner said, hey, the reaction to the firm's closure from investors surprised her a little. And I have to confess that I'm surprised too. And the most surprising thing is when they say overwhelmingly the clients have been appreciative of what the firm has done for them. Like lose money for the last 5 years. We're appreciative of that. But they're also thankful that he's been a very strong voice for investors within the industry. Well, that's a comfort. And Mr. A says, hey, I'm really okay. It's been a good ride and so much fun. I'm glad that he's able to have been able to experience so much fun. And I'm also pleased to note that one of his favorite things about managing that large portfolio was the large portfolio of cartoons about money management that the firm has commissioned over the years and shared with investors and others on the firm's website. So it's a real comfort to know that while getting paid $600 million a year to manage $31 billion a year for pensions and retirement funds, that even though we've lost 5 years in a row for you, we have been a strong voice for you, and that it's been fun and a good ride for us, and that we've got a lot of cartoons to show for it. Now, I'm just a monkey out here in Kansas. I am not a professional money manager, but I'm a strategist. And And I try to take care of my money and teach people how to take care of their money in this kind of, in all kinds of markets. And I read an article like that in a periodical that's geared to investment professionals as if it's just the matter of course. And I don't see any evidence of any sense of outrage about what that does to people's retirements. But how in the world could you say that in writing? Well, it's been a lot of fun. Got a lot of cartoons. Wish we could have done better. So this is non-trivial stuff that we're working on. I mean, I take this stuff pretty seriously, and the management of the assessment of risk pretty seriously. I mean, this keeps me awake at night. And I'm pleased with the effort that we put in to understand and then adapt to the global changes that we saw unfolding through COVID and beyond on a day-by-day basis. And so the style of trading and the techniques of risk and reward management and the due diligence just seems to me to be pretty important. And that if you want to offload your money to generic mega managers who are going to get paid first and who have the ear of Congress to protect their assets because they're managing the retirement accounts at DC. I mean, it's not a fair game. But under no circumstances would I ever play the game that way. I just don't understand that. And so I'm going to keep doing what we do every day and try to teach what we learn every day. I was just blown away when I read that article. The cavalier attitude. Well, what more could we do? We have cartoons. Wow. I think about firefighters whose retirement funds aren't performing the way they were led to believe they would perform by professionals. That's unconscionable. We have a saying in the Army that you are your own best career manager. I think you are your own best money manager if you are skilled at it, I guess. That's always your responsibility. I just found that really disheartening and irritating and motivating at the same time. So here we go. All right, let's get going here. All right, so we got a series of swings. This one is, let's see, who's this? Got a bunch from Mark. So I think Mark is, he's trading on the 90-minute chart here. He asked me what I thought about that. So here's some observations I'm going to make. The first thing I'm going to show is on the daily chart, right? Fall, winter, spring, summer, PSAR flip. That's your entry. Here's a secondary entry. This one has already had 2 legs up and peaks right here at Z2 on the daily. That's this peak, which is peaking at the Z3. This risk box, which is to the daily, the bottom of the dragon on the daily is this risk box, which is just outside the Z3. I think that's sensible and reasonable as a position sizing risk. I look at this, so entry here, entering at the Z3 breakout, stabilizes, then breaks out here. And now at this peak, I want you to notice that you are at about, I'm going to say about 0.7 compared to this as a 1.0. So we're at 0.7. It's at the Z3, it rolls over. Here's a 1, 2, 3 exit. Here is an RLXD exit. Here it finds support and then rolls over again. And now I have a high and a lower high. And now I have a collapsing dragon right here where it crosses the RL270. Here's the break-even entry. Here is that's also a collapsing dragon move right there. That's actually a short signal. This one is now we have a lower high here and a lower high here, and a lower high here. That is also a short signal. And now we're holding at minus 0.8. And so from the peak, this is down about minus 1.5 from the maximum favorable excursion. And so this is also the price level at which, it did hold support. So in fact, if anything, I actually am interested in this as a potential entry, but I can't support losing 1.5 when I was 0.7 in hand and had 1, 2, 3, 4 reasonable exits, 2 of which made money, 2 of which limited the loss, and these last 2 which actually give us tradable short side signals. So my spider sense is that you've got this in play as an initial risk, but you need work on exit management when the position is going against you, especially when you have like a windfall profit like that. That was an extraordinary move in Bitcoin. That was an explosion of gains in Bitcoin. And that already is coming at the end of an amazing move already. So how much more could there have been in this? I don't know, but there's evidence in here that would support an exit decision. So that's what I'd say about that one. This is GBTC. This is the same trade as Bitcoin. So this is BTC USD. This is the same trade, only taken in the grayscale, and it's going to be the same thing. There's the, quickly, there's the sell-off, finds support, supported spring crossing. That's the play. And then this is the RLXD exit right here, which is at least in here. I'd be looking for a potential reentry here as a Kata 2, because here's a support level, here's a support level, here's a support level, there's a support level. So if this holds and then takes off, that's good to go. And then you'll know it's good when it breaks above this hump of the dragon. And if it breaks above that hump of the dragon, if I entered here and it broke above here, I'd be getting my stop to no lose plus dinner for 2 and lock in that gain. And then I'd be looking at a second position, possibly up here. UYM. Trying to read the timing on this one. Harsh winter support, higher support. SSC. I would probably, and when this goes to summer, maybe a Kata 2. So we've got, that's the open gain right now. UYM basic, so it's a 3X materials. I think if this started failing, I think I'd be scratching right there, because it's now failing at a price level where it failed hard before. But we'd like to see this thing move and go. I would actually be interested in a second position right there, because it will have cleared all of this crap, and then that feels like it's upward. So I think I would, I think I'd have my stop right about here to get it to break even. This is much better timing on the entry. Winter, spring breakout, locks that in, gets a second position in. If your exit was here, then you've got 1, 2 in hand with momentum, and you're right about here. I think I would, because you got 2 positions in, I think I would be strong on the exit, like right here for the whole thing, and keep the 2. 43.69. Yeah, it looks like it's more than 1 hour, but I'll trust you on that one. This one's in better shape. Your timing was sweet on this, perfectly nailed. Spring, summer's good. 2R plus momentum in hand. Clears this. Solid support or a exit right here. So that's going to be a great one. That's probably 3 to 4R gains in hand already. I like it. Since it's the S&P and that's an all-time high, I'd be ready to go on a shorter term with an extra entry here, because it's a failure to fail. Yeah, and he's noted third entry if it goes to. I would use kind of the price level. I think I'd pick that price level as the key. This is a great exit. Pretty good entry. That was about as good as that was going to be. You know, there's that gap up and then the follow through. I like it with a tight stop. Second position after 2R in hand, exiting the whole shebang. Nice. Oh, let's see. Exited at no lose plus dinner for 2. Keeping the first position open. And you have 2. Okay, so if you're just selling 1 to maintain this one, I don't disagree with that, as long as you are preserving what you want to preserve on your first position. Like I'd have that, I think, not lower than the the Bollinger Band mean, and then I'd be looking to put the second position back on if it breaks above this, because you will have cleared that entire resistance level. So I like the 1 plus 1, scratch it, and then have the second one, have it ready to put back on at the start of the week. I like that. This was in good shape. This is Susan. Let's see. Tate. Good entry, nice tight stop. There was a big move up and about a 1, 2, 3 entry to make bank. I like it. Well done. Nothing wrong with that. Now we got a Z3 pinch happening, and that thing is breaking down. So get paid. That's what that is. That was a nice trade. This one is in Microsoft. Catches the swing very nicely. Nice little tight wrist box here. Anticipating the PSAR flip, which is in full support. Gets the second position on when it crosses above. Looks like maybe the VWAP there or a resistance. And she raised her stop to here and now to here. I like that because now both of these are in play. Both of them are in the money. And if this breaks above here and you see strength in tech and strength in, so if S&P was up and XLK was better and Microsoft was better than both of those, then this is where I'd consider a third position turbo intraday on your 10-minute chart, like you were asking me earlier, and get some juice out of Microsoft there. Ken H series now. And this is an example of core and turbo and tight risk management. So there's the fun and joy of Adobe. There's the PSAR flip, and that's why you don't stick around. You would call that a harsh winter, I believe. And there's his supported spring crossing right in the bend of the dragon with a nice tight stop. That's this one. And gets a benefit of a windfall. It consolidates and takes off again, gets a second position, takes a third position on the Z3 pinch breakout, gets a fourth position on the breakout above the RL30. There might have been caught a 2 there, as he notes. So missed the reentry. Okay, cut yourself some slack. And then it's all out. And so 13.5 R. We can live with that. In 8 days. Find the movers, but don't stick around too long. So that's 13.5 R. 0.5. So this is some of the, I got the some of the swing action in here, if I'm reading this right. A swing long. And a swing exit, because it didn't follow through and broke down below. So take the hit. And now the harsh winter. So now he plays the price crossing the dragon. If he plays the RL10 crossing the dragon, he gets it. So same difference. Second position and a good exit for 5.5. Tries a short, takes the 1 R hit, tries the short, or no, I'm sorry, tries the long, takes the 1 R hit, re-entry on a 1, 2, 3, second position, and then snap. Should have gotten out of that one at just a fraction earlier, but that's +2 and -1. So 5.5 -1 +2 is 6.5 on that one. Home Depot. God, have we been talking the crap out of this one? Beautiful move. Collapse, support, support, supported spring crossing. Anybody? Pulls back, supported spring crossing. Anybody? Exit, higher low, higher low, higher low. Kata 2s abounding with the supported spring crossings in support. He takes this one instead. He waits for it to get above the Z3 pinch. So there was places inside here where entries were possible at about like 335. That's this one. So this entry here at 335 with the stop below the dragon, that stays in the money the whole way. And then that makes this one the second position at 350. And look at this one, only had about a $3 risk. And so getting long at about, call it 336 to 366 is $30 on a $3 risk. That's what 10R looks like. But I like this one too. It's clear. It didn't fail here. That's a Kata 2. And that's from 352 to 366. It's about $15. That's about 3R, I'm going to guess, if he's using a $5 risk. I think you might have used this instead of this. And that's the difference between 3 and 6R on that trade. But that's as nice as it gets, man. And there's no resistance overhead. So you can be adding positions if it continues to march up in here. Nice. When he's wrong, he's small. When he's right, he's large. My gracious. Pfizer. All joy. Oh, there's the RLXD. That's why you don't stick around. There's a collapsing dragon. There's a collapsing dragon. It finds a support at like 42 when this was the previous. That's actually a Kata 2 entry right there. This was a reasonable effort. Good scratch. Here's a low. Here's a higher low. This was possible. This was possible as an entry. I don't mind waiting for this one because it made this push and held higher. I kind of like that. And now the price is at 43.15. I might be ready to just get it to here and lock in a bit of a gain. This is the next target in sight. If that gets above here, that's where I'm putting the second position. And then if it gets above here, that's at 45. That's where I'm putting the third position. And this thing has a long way to go to 47. And if those two entries work, he's going to have 3 positions on that move. And then if that gets out of there, 49 is in target. So that's really nice work. Not going to lose money on that trade. Wheaton Precious Metals. There was the harsh sell-off, harsh winter. Turning point of the RL10. Crosses the baby dragon, enters the dragon, turns to spring, RLXD. He takes the PSAR entry, uses a tight risk box, immediately gets paid and cashes. There was an opportunity to re-enter in here, but I don't mind if you don't take that one. Like if you'd have taken that one, you'd end up cashing it in here. But this was a higher low and another higher low. That's a reasonable Kata 2, but because of the gap, you don't get it until here. So this one is still underwater. Yeah, should have exited early, like right here. I agree. But at this point, you're getting ready. You would be re-entering right here anyway. So you just got a crappy entry and just live with it. And that 3R that you made there is paying for the self-flagellation. So forgive yourself and say, should have done better there. But as soon as this works, you just got a bad entry. So forgive yourself for the training you're about to do. SQ, this one is hard. I mean, if I'm being honest, that is just hard Army work right there. Fractional gain. That's probably 2R gain. 3 winning trades out of that whole mess. Holy mackerel, dude. That's pretty good. And what he's doing is finding those low points, getting them as they cross the dragon, and then being ruthless about exits and ruthless on reentry. This exit here is good because you don't know that it's not coming back to here. You don't know that it's going to immediately reverse. And you wait to see it get through that crap, and then you buy the Kata 2. And then could we have done better there? No, not really, because there's a gap in there. And so that's about as good as you're going to get. And you gave it room. That's really good work in a tough target right there. GDRX, good RX holdings. So this is in that healthcare space. SSC and gets paid. SSC gets paid. Now the fun begins. Entry 1 doesn't fail. Entry 2 doesn't fail. Entry 3 doesn't fail. Exits got to be in here somewhere. Looking for it. Probably in here. Oh, it's not on this chart. So his exit's got to be in about here where that scratches. So really nicely paid throughout here. Oh, wait, I'm sorry. There's an exit right there. Got it. And then a reentry and probably a scratch. Good scratch. Nice recovery. And now this trade is this one over here. So he's got a low, higher low, Kata 2, breaks above the Z3 pinch for a second position, makes this move, gives it as much as he can tolerate, and then just cashes. And now is getting ready for the breakout reentry. And I'd have my stop here rather than maybe, I mean, I don't mind that, but I think I'd try this one right here. If you saw some strength, because that's clearing a major obstacle over there. And I'd want the larger position size. Oops, that was Susan's stuff. I erased that from your other one, Susan. All right, really good work, fellas. Manage that risk and the rewards will take care of themselves. And I expect them to lose every time I put the trade on. I experience the full 1R loss, and I'm never going to let it be more than that. So the emotional angst of, oh my God, is already over. I've already experienced the emotional suffering of the worst loss that I'm going to professionally take on that trade. And emotional resilience and that zero state and standard trade frame. How many of these trades we saw from Ken H started with the precondition was a harsh winter? Yeah, a harsh winter. All that froth being blown off. And then careful management of reward and risk at every step on the curve. Relentless, ruthless risk management. Every morsel is a meal. We don't have the luxury of having 5 bad years in a row and getting paid $600 million to manage $30 billion of people's retirement money. I try to keep that in mind. All right, guys, stay hungry, stay relentless, take good care of yourself. Forgiveness and gratitude is everything. And So this was in one of the Thorpe base camp discussions. Things you got to be excellent at. You're probably as good as the worst one of those parts of your wheel. I don't think I'd disagree with any of those. I think I'd probably move psychology and mindset and discipline to the center. But that looks pretty good. Just going to leave you with some artwork from this Nigerian American artist that I'm really becoming fond of. Well, it feels like that sometimes, doesn't it? Unraveling all of the unravelment, all the things tying you up. Looking for that breakout. Her work just really speaks to me. This really speaks to me, this one. This one may be my favorite. All right, guys, take good care, and we shall see you tomorrow at 8:30 for the trade frames, and getting after it for another fresh week ahead. You got to trade this market going forward. You learn by looking through the rear view mirror and to your left and right and scanning the road ahead and making the adjustments in time. You don't have to be right. You just can't stay wrong too long. Take good care, and we'll see you tomorrow.